Hello everyone, welcome to the Trendline Investor channel. So today I have two different parts to this video. One is investment picks, which look really good for the next couple of years, and some of the companies are actually fundamentally good as well. And along with this, I have the second part of the video, which is the swing picks, which we have two interesting stocks which are looking good with just a 7% stop loss, and I think they might do well in the next couple of weeks. So let's get started. First with the investment picks for today. And I'm going to also discuss very interesting aspects from KAC International. So I refer to some numbers which I will give you a short overview, and then we can move on to the technicals. Okay, so this company is a mid-cap company around 13,000 crores market cap. PE is slightly high at this point, 75.6. ROC is 10.1, ROA 4.76. So overall, it's a profitable company, but the stock has not done much for the last few years, right? Now, I have this numbers from here, the trends of revenue, PAT, and a few other numbers from ICICI Direct Research. So if you are looking for reports, reliable reports, especially ICICI Direct is one website which I rely on. So if you want a report on KAC, just type KAC International, ICICI Direct, and in brackets type star.pdf, and you will get some research reports. And this is how I found this latest report from ICICI Direct. I think it was published last week or so, and I have some numbers from there. So first, looking at KAC International, the revenue trend has been clearly up. So since FY15, the revenue numbers have been going up steadily, especially if you see in the last few years, it has really started going up. Now, the expectation is, at least, if you see the expected numbers over here, the expectation from KAC, depending on the estimates that they have given in the con call or in the annual reports, it looks like this company can do really well in the next couple of years, right? So it's going from almost 17,000 crores to almost 23,000 crores. Now, that's the revenue part. Now, for the PAT, or the profits after taxes, also is bound to rise sharply in the next couple of years. Now, if you see from FY15, we almost hit an all-time high PAT in FY20. And since then, numbers have been going down. And now we are expecting FY24 and 25 to really do well. And this company, if it does so well, and if it meets the market street expectations, then the stock also will tend to outperform. So that's the trend or the numbers I've got from ICICI Direct. Now moving on, I also have some other numbers on the order inflows, right? Now if you look at order inflows, also we're seeing some strong, so almost the order inflow has been stagnant, but starting this year or last year onwards, we are seeing some sharp rise in the order inflow in KAC, right? And it's expected that we're going to see some really good inflow in the order book in the next couple of years, right? Also, if you see the order backlog that they have also is looking very good. And I think this probably might be the trigger for this company. And if they do the execution part very well, the stock can actually go up from here, probably double also from here. Okay, so that's some of the numbers from ICICI Direct. Now, I also have some commentary from the same report. One of the key commentaries or the key trigger for the future performance of KAC is this, right? They expect the revenue to grow at a 14.9% CAGR in the financial 2023 to 2025, owing to the strong order book, as I mentioned. And they also have a strong order pipeline, which will also ensure decent order inflow growth. Right now, they have a Brazil business, which is the SAE business in Brazil. And apparently, it has also turned EBITDA positive this year. This quarter of Q4 results that were announced this month. And also, they see a gradual improvement in the overall profitability in the coming quarters. And also, good margins or new orders with good margins are also expected from the SAE Brazil business. Okay, so that's one of the key triggers which ICICI Direct expects will be the trigger for the future price performance. Along with this, also in the conference call from this quarter earnings, they also have guided for 12% growth in order inflows, which is 25,000 crores, and 15% growth in revenues for FY24 with a 7% EBITDA margin for FY 2024. Okay, so that's the outlook. Remember, the EBITDA margin is right now around 4.5%, I think. And if it goes 7%, that's really good numbers. With increased revenues, the profits might actually also be very good. Okay, and as I said, on the margins front, the company expects margin to improve 50 basis points every quarter and reach 7.5 to 8% by financial year 2024 end. Now, if you can kind of get to that number, and if it does beyond that as well, it will be very good. And basically, this is could be a key trigger for the price movement. Okay, so that's from a fundamental aspect, right? Now, as always, I try to look at fundamentals at least a little bit. At least I take a look at the ROC, ROE, the PE, and I don't want to invest in a company where it's really not profitable and it's doing very bad. If I were to look at a fundamentally bad company, then that will be from a pure swing trade or pure technical analysis perspective. Okay, so leaving that aside, let's take a look at the technicals of KEC International. Now, I posted this also on Twitter, so if you're not following me on Twitter, do follow me, because I posted this somewhere around this time, but the stock has not done much, so you have not missed out on a major move yet. But what I'm seeing of late is this strong candle that we are forming this month. Right now, if you look, we had a strong candle a few months back, and then we just having dojis after dojis. And this month, finally, we are seeing a strong move coming, especially last week. We had a strong move in KEC International. Now, this is also a consolidation about 2018 highs. So this is almost 2-year consolidation, and this is a very, very tight consolidation. Now, usually when we have such tight consolidation and there's a breakout or a breakdown, it's going to be a little strong, and the volatility can be huge as well. So in case the stock breaks out, I'm expecting at least a quick 20% returns in the short term, and probably even much higher in the long run, right? Also look at the volumes. Whenever there's a green month, the volumes have been excellent, right? Now that's also very important to note, because whenever there's a strong move up, there is huge money coming into this company, because of which the price is moving up, right? So that's the monthly chart. Now, as always, let's also look at the weekly chart to give you a closer picture on what's happening, right? On the weekly chart, now this is a beautiful chart because this area is a major support zone, and this area is a major resistance zone. So if you clear that part, or if you clear this part, and if you go down, the stock might do very bad. But I think we're going to break this and head higher. Now, if you look at this tight consolidation over here, the last few weeks, we had a very tight consolidation, and look at that relative strength. The relative strength has been very good, which means the stock is outperforming the markets in spite of the markets were weak in the last few quarters. This stock has been able to hold the overall price action here, and is looking really good. And look at this week, we had a very huge volume surge along with a very strong candle. Right now, that's what gives me the confidence that this stock might break out. And even if it doesn't break out, it will probably break out in the next few weeks. But what we're going to do is we're going to keep a stop loss here, and the stop loss is going to be somewhere around 440, which is 15%, and you can buy the stock at current market price. And probably you're going to look at targets of 950 or even 1000, which is around 80% from here in the next 2 to 3 years. Now, this is a pure investment or a positional trading bet. So you need to hold on to ups and moves, ups and downs. So if there's an up move of 20%, then probably there'll be a down move of 10% or even lesser. But you need to understand that this stock might take a few weeks to move up probably. And if it starts moving up, it's also going to have some moves down, right? So it's very important to understand this and invest in the stock with a period probably next 2 to 3 years, unless you get a target of whatever you want, right? Now here, this brings us to a target of almost 5.5 times the risk. So we're looking at a risk of 15%, but a target of 80%, which is 5.5 times the risk reward. Now that's the first stock for today, KEC International. If you did like my analysis, don't forget to subscribe to my channel and like this video as well. And do me a favor by sharing this video with your friends. There are a lot of people who want to learn, so let's do a favor to them as well. So let's move on to the other 3 investment picks for today. Second one is Goodyear India. Again, I posted the stock this week on my Twitter, and it didn't move that much. I think I posted somewhere Monday or Tuesday, but this stock moved really well in the last couple of days, especially towards the weekly close, right? And now we're kind of having this again a tight consolidation here. Now, if you look at my picks here, every stock has a tight consolidation and is looking to break out, right? Whereas also relative strength, CCA also looking bullish, and I'm having the same pattern in both the stocks that I discussed until now. So it's very important to have a strategy in the kind of stocks that you pick, because these stocks, they have a major consolidation, and if they break out, they can bring really good returns. So when you buy a small position, you see if it works out, and if it works out, then you add more and you build onto that position and you focus on your winners. Now, out of these 4, even if one performs, you need to focus on this one and you need to build up your position in this one stock, right? As and when it moves higher, after every consolidation, after a breakout, you need to add more to the stock until you have probably a decent 10% position in your investment portfolio, right? Now that's the strategy that you have to follow when you're buying a stock which is coming out of a large consolidation, because out of these 4, 3 might not do well, but even if one does well, and if it goes to 50%, and if you have 10% position, you're going to gain 5% on your overall portfolio. So that's a short insight as to how you should be buying the stocks. Okay, so let's move on. So this is a major 5-year resistance. So around the 1300 mark is what we have to really look forward to. If you break the 1300 mark, then we're entering a long-term uptrend. 5-year consolidation is over, and we are probably heading higher towards levels of 2000. So you can buy the stock at current market price, which is 1200. keep a stop loss of 12.5%, which is around 1050, which is I think around that zone over there. And we're going to look at targets of 2000, which is 66% from here. Now remember also, this is a tire company which caters more towards the farming space or the tractor space. Overall, the tire sector companies have posted really good numbers, including seed. Also, this company is trying to enter the passenger vehicle space. So if it clicks, then it might do well, probably as well. Like, leaving aside, the farm business is one of the biggest businesses for Goodyear. It might continue to do well. It has not done well for the last 5 years. So I'm expecting a breakout, and it probably might head higher from here. Okay, so that's the second stock for today. The third stock is Forgings. Now, this is an excellent company from the steel space. Okay, so this company also has not done well for the last couple of years. It has been going sideways, but overall, this company is still in a long-term uptrend. So overall, if you look at the structure of this chart over here, the stock had a very major uptrend, but then we're just going sideways for the last couple of years, right? And now this week, we finally had a very, very good closing on a weekly charts. And also we've seen some spike in volumes as well, right? So volume spike. Again, CCI is strong, latest is strong. Again, the same set of characteristics in the first two stocks we saw. Similar tightness, similar breakout, similar CCI, and similar RS strength as well. So overall, I think I don't know to say more on that, but I think it's a very good bet. Probably it might do well as well. Now, one question you might have, why did I draw a channel like this, right? Now here we have just 2 touch points. So I'm expecting that this probably might be the end of this price action. And if it does, then this probably is a channel support. And also, if you see here, we had this nice price action around the middle of the channel. So that gives me confidence that this is the upper channel and this is the low end of the channel. Now, this, unless you're really very good at drawing trend lines, I wouldn't recommend drawing these channels here like this, because you might completely get it wrong. Rather focus on just the horizontal lines and you might just do well, right? You don't have to complicate technical analysis. You need to just get a higher high, higher low. And if it forms after a long tight consolidation, then you are in the right stock. Okay, so you can buy the stock at current market price 900. Keep a stop loss of 11%. Now again, note the stop losses are just 10 to 15% maximum, even if it's a positional trading or investment pick. Because with the 10% position size, if I'm going to lose 10% or 15% also, I'll lose 1.5% maximum in my portfolio, right? Now that's very, very important. A 10% position size with a 15% stop loss, I will lose maximum 1.5%, not more than that. But if the stock goes up, let's say 50% in this case, then I'm going to gain, if I have 10% position size, then I'm going to gain 5% overall upside in my overall portfolio, right? So that's a short insight again. So let's move ahead. So you can buy the stock at current market price, stop loss of 800, which is 11%. Going to keep a target of 1350, which is 50% from current levels, which is 4.5 times the risk that we're taking. So that's the third stock. The last investment pick before we move on to swing picks is Greenply Industries. Out of these 4 stocks, out of the 4 investment picks, this one is right now an underperformer, right? Again, I'll teach you how to buy the stock. It has to be a completely different aspect of how you buy this one. Now, this stock has reversed from a primary trendline support. Now, if you look at since 2005, this is a trendline support, and we're reversing now. Now, if you see, we had 2 dojis, and this month we are kind of reversing, and we are also almost volumes have completely gone down, and I think this might head higher as well now. Now, this stock has not formed yet higher high, higher low on the weekly charts. So for now, you just buy a 2.5% position size and see how this stock performs. And if the stock starts moving up very strong, and if it forms a higher high on the weekly charts, probably around levels of it goes up like this, it comes down and then again goes up. Then at that point, when it again crosses the previous high, is point where you have to buy. Right? Again, let me clear that again. The stock is right now like this. It'll go up, probably it'll come down, and then when it crosses the previous high again, that's when you go with a full position size. Now this can be done even on a daily chart. If you're well versed, then you can up your position size to 10% and try to hold the stock. But for now, keep 2.5% position size. You can buy the stock current market price 156, stop loss of 14, and I'm looking at targets of this previous high that we had. Now remember, this is a major resistance, so I'm expecting the price might come here and consolidate for some time before it eventually heads higher. Again, Greenply is a fundamentally very good company. So if you're a long-term investor, this is probably a very good point to buy if you want to hold it for the next 5 odd years, right? So it can eventually hit even targets of 400, which is the upper end of the channel. And that might come, as I said, in the next 3 to 5 years or so, right? So that's how you should buy. Targets 250, which is 60%, and 5% of your portfolio as well. So these are the 4 stocks. Again, do follow the position sizing technique that I told you. Do not be very aggressive. And let the stock tell it's performing, and then you add more. Okay, so that's the investment part. Let's move on to the second part of this video, which is the swing picks for this week. Now swing trades, I've already done a masterclass on swing trading. If you haven't watched it, do watch it, because there are a lot of position sizing rules I've also described as to how you should buy, what quantity you should buy, and all of this. Okay, so if you did not watch this, please do watch it. Now let's move on to the first stock, which is IEX. Now, IEX again is, after a very, very long time, the stock is now consolidating and it's breaking out, right? If you see, volumes have been huge. Again, this week, volumes also have been huge. So finally, the stock, after this breakout here, we had a nice little consolidation. Now again, if you see, consolidation is what I look for, and I look for a breakout. Whether it's investments, whether it's swing pick, swing trades, anything and everything, I need a tight consolidation before it breaks out, or I'll be probably expecting a breakout and buying it also, right? Now here we had a breakout here. The candle wasn't great, and because of which I have a different buying strategy here. You should not buy the stock current market price. I'll come to that shortly, but the reason I'm giving you this today is we had nice tight consolidation. Now the stop loss here is just 7.4%, which is a swing low here. So since I'm expecting this trend to continue up further, that's the reason why I'm giving you this as a buy recommendation, because the first time we had a basic long base breakout and a higher high formation as well. So you buy the stock above 162, which is the swing high, which is the high of Friday. Why am I saying only buy above that point? Because this candle has a wick, a long wick on the top, and this might also indicate there's some short-term selling, which means the stock can come back towards this level of 150 odd levels also. So that's why I'm saying buy above the highest or high day of Friday, buy above the highest point of Friday with a stop loss of around 150, which is 7.4%. Or you can also, if you're aggressive, you can buy at current market price as well. But I don't recommend that for a beginner. Only if you have experience, buy at current market price. Otherwise, buy above 162. And then we're going to look for targets of 190, which is 17% or 2.3 times the risk, right? Now remember, in swing trading, it is very important for you to book at least some quantity when the target hits twice the risk that you take. So if you want to know details on that part, you have to watch this masterclass on swing trading video that I did. Okay, so that's the first swing trading pick. The next swing trading pick is specialty restaurants. Now this stock again had a nice trendline reversal, again a very tight consolidation, a breakout, and then 2 weeks of sideways movement, right? Now again, consolidation is very, very key, right? Now we had a nice breakout on that week here with nice volumes. CCI almost came back to 100. Relative strength has been very, very good on the weekly charts, and the stock has been going sideways for the last 2 weeks. So I think this week over here indicates there is demand. So for that reason, I think you can buy the stock at current market price, which is 240. Here you can already enter 240. I don't see a problem, why not? Or you can also buy above the day high as well, up to you. The stop loss for this would be 225, which would be that point week low, and stop loss is 6.25%, and we're looking for targets of 280, which is 16.66%, right? As always, try to book at least 50% when it reaches 2x the risk that we take, and remaining you can ride the trend as well. Okay, so these are 6 stocks I wanted to discuss today. I hope you enjoyed this video. If you did, do share this video with your friends, and I hope you will follow the position sizing rules as well. Okay, so that's it for today. I'm going to leave you here. Take care, trade safe, stay safe. Until I see you in another video. Bye-bye.